One of my other investments was a company called Betfair, which invented person-to-person betting. So it was an electronic betting market rather than the traditional system where the bookmaker sets the odds. And it wasn't the difference between online and offline, because the bookmakers had their own online businesses, but it was actually making good use of an online thing where you can actually have people setting the odds. You don't need the bookmaker to do it for you. So someone says, I will place this money at these odds, and someone else comes into the market and says, yes, I will accept that, and or not. Or I'll post my own odds, which, you know, if you make the odds just a little bit better, I will have the bet, but I won't at these odds, and so on and so forth. So this was a business that was growing at 50% a month, etc. when I invested. It was a tiny company. I invested £1.5 million, so just over $2 million in this company, and I bought 10% of the company. It had been going for about 6 months. I wasn't the founder or anything like that, but you know, I thought, well, you know, it's growing very fast, and it's created this niche of the betting exchange, which is definitely a different business, different economics, different way of organising, different technology, different operating costs, far lower cost way of doing the thing, and far lower price, because the commission that they charged customers was about 15% of what effectively the equivalent was from bookmakers when they set their odds. So, you know, you could have a situation where you were coming in and you were charging people 87.5% less than they were paying before. No wonder anyone who was seriously price sensitive would actually go to this company. When I invested, it was tiny, but it was growing very fast. It was obvious to me. So what should the big bookmakers in Britain, you know, the big three companies as they called them then, Ladbrokes, Coral, William Hill, what should they have done? Well, it's obvious, you know, they should either have had their own betting exchange, which might have been a bit difficult because it was a little bit clever the way, but they could have worked it out. You know, this company started with $2 million capital, you know, and then, you know, basically I put in my $1.5 million, and it never needed any more capital because it came cash positive pretty soon after this. So the big bookmakers could have worked it out. But the more sensible thing for them to do would probably have been to buy this company when it was really cheap.
Yeah.
Yeah. So, you know, it was capitalised at £15 million. You know, they could have bought it for maybe 25, 30 million pounds. I'd have made double my money, and not quite, but I would have said, yeah, that's a great investment. When it floated on the stock exchange a few years later, it was valued at 1.3 billion pounds. So, you know, it had gone up 100 times. You know, it was just an incredible investment. It's my most successful investment to date. I wasn't the entrepreneur. I didn't invent the system. I just looked for a star business. You know, how difficult is that?
Now, how did you find it?
A friend brought it to me. A friend said, maybe I shouldn't admit this, but I actually like gambling. So this friend brought me, he said, hey, have you come across this company? And I said, no, I've not heard about it. So I sort of went online and looked at it and said, hey, that's a pretty neat company. And he said, well, I'm an investor. He was an investor in the very first round. And he said, we're trying to raise some more money. We'd run out of money. And so, you know, are you interested? And they hawked it around the professional venture capitalists in London, you know, the big US firms, the big European firms, and all the rest of it. And all of them turned it down. You know why they turned it down, Perry?
No.
They turned it down because it was managed by a bunch of kids. And to be perfectly honest, the kids didn't know what they were doing. So the venture capitalists were, you know, venture capitalists have got this mantra which says, you know, there's three things important in a young business: people, people, and people. And so these people weren't professionals. None of them had run a firm before. None of them had even been in the gambling business before. So, you know, they were just friends of the guy who invented the system and people that they'd picked up from here, there, and everywhere. And they were, you know, they didn't do a terrible job, but they certainly weren't highly professional in what they were doing. And so, you know, I said, you know, the management might need strengthening, but that, you know, the idea is so good and the positioning is so good, and it's a bloody great star business in a hugely growing segment of the market. So why shouldn't I invest in that company? And so, you know, not one venture capitalist will invest in this company, which is why they were desperate, which is when I came along and said, I'll invest £1.5 million, which is what they needed to keep going until they reached break even, and that was true. They reached break even after my £1.5 million, and I got 10% of the company. Fabulous.